There's some interesting growth and income opportunities in insurance and natural gas that you might want to know about. And in case you do, our growth and income stock strategist Todd Bunton is here to tell us more. In the insurance area, there's the Travelers companies. They've been around for a while.
Yeah, they have. They're actually in the Dow Jones Industrial Average, one of the 30 components there.
Yeah.
They're one of the largest property and casualty insurers in the U.S. Now, over half their business comes from business insurance. So they insure corporations, corporate auto, corporate properties. Mm-hmm. They do have about a third of their sales come from retail clients.
Personal lines?
Yep, from auto and homeowners. But like you said, they've been around a while, big name. Companies delivered 3 consecutive positive earnings surprises, and a lot of that is because they've been able to implement price increases while keeping their claims, relatively steady. So their margins are expanding, delivering solid bottom line growth. And as you can see, analysts have been raising their estimates significantly higher over the last couple of months after their latest beat. You can look. I brought with me a chart that shows the agreement and magnitude of analyst estimates. Those are the 2 biggest components in the Zacks rank. And you can see that those are both moving in the right direction. Analysts are almost unanimously raising estimates, and the magnitude of those increases is relatively strong. So sent to a Zacks rank of 2, which is a buy rating. Analysts expect solid bottom line growth to continue over the next couple of years.
Okay.
So good earnings momentum here, good growth, and very solid income. They pay a dividend that yields 2.4%. And they've increased that at a 10% compound annual clip over the last 10 years. Very shareholder-friendly company as well. So you're getting some income to go along with solid earnings growth, and you're getting all that at a reasonable price. They trade at just 1.5 times tangible book value. The industry median's at about 1.9 times, so it's a discount to that. Could be solid total return potential in this name in 2013.
Interesting. The natural gas company that you want to talk about is Chesapeake Utilities Corporation, CPK, the ticker.
Yep.
And likewise, I think they've been around for a while too. Right?
Oh yeah, absolutely. I think 1859 is when they were founded. So
that's a while.
Pre-Civil War. Yeah, they operate on the Delmarva Peninsula, and I actually had to look that up. I'm not from the East Coast, but that's Delaware, Maryland, and Virginia. Most of Delaware, parts of Virginia, parts of Maryland.
I see.
Yeah, it's the little peninsula hanging off the East Coast there. They're a natural gas utility operating there. They also have a subsidiary in Florida, but you've heard a lot about utilities lately. Are they overpriced, and are we seeing that multiple come down as interest rates go up? I think Chesapeake is a lot more reasonably priced, which I'll get to in a little bit. But the company has very solid other fundamentals, and the first one is earnings momentum. The company's delivered 4 consecutive positive earnings surprise. They just came off a very solid first quarter beat, and part of that was due to colder weather. We had a cold spring, cold winter, and that obviously helps the natural gas companies. But a lot of their growth also came from customer growth. So there's a growing demand for natural gas, both from retail and commercial clients, and that helped drive the bottom line. Like I said, 4 consecutive positive earnings surprises. If you take a look at the earnings momentum, it's very solid, especially for a utility. These are usually pretty stable, boring companies, but you can see the company, since they've delivered 4 consecutive positive earnings surprises, analysts have significantly raised their estimates. You can see in the price and consensus chart for both 2013 and 14. Analysts expect solid growth as demand for natural gas grows, and Chesapeake's able to meet that demand. They build out, they put some infrastructure in place in 2012, and that's been paying off recently and should continue to pay off over the next couple of years. And as a utility, you'd expect them to pay a solid dividend, and they do. They pay a dividend that yields 3.0%. Wow. They've increased that each of the last 10 years going back to 2003, and they've increased that at about a 3% compound annual rate. So very good income to go along with solid growth, stable growth. And like I talked about at the top, their valuation's pretty reasonable. Now, the industry median for utilities is about 19 times forward earnings. That is a bit of a stretch historically for utility companies who are traditionally low-growth companies. Chesapeake trades at 15 times, so it is a significant discount to the industry average. And if you look over the last 10 years, Chesapeake's traded at an average of 15 times forward earnings. So it's right in line with their historical median. And when you factor in the earnings momentum and the income here, there's a lot to like about Chesapeake here.
All right, interesting stuff. Do you own either of these?
I do not.
Check out other stock picks and stock picking strategies. I say this all the time, but it's all there for you on our website, Zacks.com. If you're watching this video in syndication, that becomes especially important, so you need to get on over to the homepage and check those opportunities out, Bull and Bear of the Day, and as well as others. They change often, so check back frequently. With Todd, I'm Terry Ruffalo.